Welcome back to Prop News Time. Here are the headlines for the day. Vijayawada Metro to connect Gannavaram PNBS and Penamaluru in first phase. The Andhra Pradesh government has approved the 11,009 crore rupees phase 1 of the Vijayawada Metro, covering 38.6 kilometers across two corridors, from Gannavaram to PNBS, 25.9 kilometers, and PNBS to Penamaluru, 12.76 kilometers. With 34 stations planned, the metro aims to ease traffic and enhance urban mobility. Land acquisition of 91 acres is underway at a cost of 1,152 crore rupees. The project follows a public-private partnership model, with 40% funding from the centre. A future extension to Amaravati is also planned. The metro is expected to transform Vijayawada's transport network, linking key areas and supporting regional development. Vizhinjam International Seaport, India's new transshipment hub, set to handle 3 million TEUs by 2028. The Vizhinjam International Seaport, located near Thiruvananthapuram, Kerala, is poised to become a major transshipment hub, reducing India's reliance on ports like Colombo, Singapore, and Dubai. Developed under a 20,000 crore rupees investment by the Adani Group and Kerala government, the port features a natural depth of 24 meters, enabling it to accommodate ultra-large container ships, ULCS. With trial operations underway since July 2024, Vizhinjam has already handled 1 lakh TEUs. Expansion plans aim to increase capacity to 3 million TEUs by 2028, integrating cruise terminals and boosting regional economic growth. Kattupalli Port's transformation, from shipyard to strategic maritime hub, with 53,400 crore rupees expansion plans, Kattupalli Port, near Chennai, was launched by L&T in 2012 and acquired by Adani Ports, APSEZ, in 2018. Initially designed for shipbuilding and limited cargo handling, APSEZ aimed to transform it into a major maritime hub. Expansion plans to boost capacity from 18 million tons per annum, MTPA, to 320 MTPA faced environmental opposition, prompting scaled-down proposals, including a revised 2,100 crore rupees expansion. Despite challenges, the port earned 1,592 crore rupees revenue in FY23. Strategically located with 24/7 access and efficient cargo handling facilities, Kattupalli remains a vital multi-cargo port. Its future hinges on balancing infrastructure growth with environmental and community concerns. Indore emerges as MP's green building leader. With 170 certified sustainable projects, Indore leads Madhya Pradesh in green building development, with 478.3 million square feet of eco-friendly spaces, out of the state's total 500.4 million square feet, according to the Indian Green Building Council, IGBC. Hosting 170 certified green projects, 150 rated gold, the city showcases leadership in sustainable urban planning, integrating energy-efficient designs, renewable energy, and smart infrastructure. Indore, along with Bhopal and Ujjain, has adopted efficient waste, water, and green mobility systems. Challenges include high investment costs and limited professional training. IGBC's Indore chapter has suggested incentives and partnerships with CREDAI to promote sustainable construction. Nationally, IGBC has 13.26 billion square feet of green building footprints across 15,500 projects. Kerala to build Wayanad Model Township for 430 families, displaced by 2024 floods and landslides. On March 27, 2025, Kerala CM Shri Pinarayi Vijayan laid the foundation stone for the Wayanad Model Township at Elston Estate, Kalpetta, to rehabilitate families affected by the July 2024 landslides and floods. Spanning 64.4 hectares, the township will include 430 expandable homes, each on a 7-cent plot, and feature amenities like a market, Anganwadi, community center, water and sewage systems, and solar power. Funded through the CM's Distress Relief Fund, 734.68 crore rupees. The initiative is part of the Rebuild Kerala program. It mirrors similar holistic rehabilitation efforts, such as those in post-flood Uttarakhand, emphasizing sustainable housing, healthcare, education, and disaster resilience. Heritage Heights. KHB announces premium apartment project near Mysuru's HD Kote Road. The Karnataka Housing Board, KHB, has announced Heritage Heights, a 7-floor apartment project at Kenchalagdu, near Mysuru, with an estimated cost of 99 crore rupees. The development will include 196 2- and 3-bedroom flats, built on a 1.5-acre site within a larger 180-acre layout, where KHB has already sold 2,397 sites. Despite MUDA halting its group housing plans, KHB is proceeding based on strong demand survey responses. Located 2.5 kilometers from the outer ring road on HD Court Road, the complex will feature modern amenities such as a clubhouse, gym, swimming pool, solar power, car parking, playgrounds, and 24/7 water and security, mirroring Bengaluru-style developments. India's office sector set for strong growth in 2025, driven by tech, GCCs, and investment. India's office sector is poised for strong growth in 2025, driven by economic stability, talent availability, and supportive policies. CBRE's 2025 outlook highlights increased supply of high-quality office spaces, especially within integrated tech parks. Key markets like Bengaluru, Hyderabad, Mumbai, and NCR will dominate, while Pune, Chennai, and Tier 2 cities gain traction. Leasing demand will be led by tech firms, BFSI, media, and global capability centers, GCCs, with flexible spaces growing in popularity. Investment activity remains robust, with rising interest from domestic and global investors. Small and medium REITs, SM REITs, are emerging as a strategic option for mid-sized developers, reflecting a transforming, resilient commercial real estate landscape. Dharavi survey covers 63,000 plus tenements, includes upper floors for redevelopment. The Dharavi redevelopment project has marked a key milestone by surveying over 63,000 tenements, surpassing the 2007 to 2008 figure of 60,000. Unlike past surveys that focused only on ground floor units, the current initiative includes upper floors, ensuring a more inclusive rehabilitation process. Over 95,000 tenements have been mapped and 89,000 units numbered, with strong resident participation. Navbharat Mega Developers plans to construct around 150,000 tenements, addressing Dharavi's dense vertical growth. Officials emphasize that non-participation in the survey could forfeit housing benefits. This progress signals a transformative step toward comprehensive urban renewal, with community engagement and careful execution vital for delivering sustainable housing without disrupting the area's social and economic fabric. Mumbai property deals. Althera CEO acquires 3 luxury apartments in South Mumbai for 72 crore 65 lakh rupees. Sanjeev Agarwal, CEO of global pharma firm Althera, has purchased 3 luxury apartments in Raheja Modern Vivaria, South Mumbai, for 72 crore 65 lakh rupees, as per property registration documents accessed by Zapki.com. The acquisitions were made in 2 phases, with the first 2 apartments bought on February 17, 2025, for 26 crore 42 lakh rupees and 20 crore 9 lakh rupees, while the third was purchased on May 22, 2024, for 26 crore 14 lakh rupees. The combined RERA carpet area of the properties exceeds 8,100 square feet, and the deal included 7 car parking spaces. A stamp duty of approximately 4 crore 35 lakh rupees and a registration fee of 90,000 rupees were paid. This purchase adds to the trend of high-value real estate transactions in South Mumbai, following acquisitions by Nirmal Bank Securities promoters and Creative Plastics Group in recent years. Primus to invest 1,500 crore rupees to expand multi-generational community projects, senior living, and multi-generational community developer. Primus is planning a 1,500 crore rupees investment to expand its footprint in India. The company aims to develop integrated communities that cater to diverse age groups, combining senior living with family-friendly amenities. These projects will feature healthcare services, recreational spaces, and assisted living facilities, promoting a seamless and inclusive living experience. The investment reflects the rising demand for housing solutions that address the needs of both elderly residents and younger generations, offering a holistic lifestyle approach. Mumbai Funnel Zone projects to get TDR relief under new DCPR 2034 Amendment Maharashtra. Deputy Chief Minister Shri Eknath Shinde announced a major policy change, allowing owners and builders within the airport's funnel zone to receive equivalent transfer of development rights (TDR) if height restrictions prevent full utilization of the floor space index (FSI). Concessions in premium charges for open space deficiencies and FSI exclusions for staircases and lifts have also been introduced. This move is expected to facilitate redevelopment in areas like Santa Cruz, Vilepale, and Kurla. A provision in the Development Control and Promotion Regulations, DCPR 2034, has been approved to ease redevelopment constraints. The decision follows repeated appeals from local representatives who highlighted the financial non-viability of redevelopment due to height restrictions. Bikaner land scam. Government to revoke wrongly allotted plots in Kolayat, Bajju. The Rajasthan government has initiated action to revoke illegal land allocations in Bikaner's Kolayat and Bajju tehsils following an investigation. A committee, led by Bikaner's additional district collector, City, has been formed to examine these cases. Official records revealed that between November 2020 and October 2023, 69 cases of land reserved under special allocation and Moharban categories were wrongly allocated under general allocation in Baju Tehsil. Corrective measures are now underway, with the Colonization Commissioner or District Collector empowered to cancel such allocations. The disputed cases will be reviewed through judicial procedures after submission by the concerned Tehsildar. Navi Mumbai. Government excludes stilt parking height from 12.5% scheme building limits. The state government has announced that the height of stilt parking will no longer count towards the permissible building height under the 12.5% scheme in Navi Mumbai. This decision aims to facilitate redevelopment projects that were previously hindered by height restrictions. Deputy Chief Minister Shri Eknath Shinde stated that the Unified Development Control and Promotion Regulations (UDCPR) will be updated immediately to reflect this change. The 12.5% scheme, initiated by CIDCO in 1994, allocates developed land to project-affected persons, PAPs, whose land was acquired for Navi Mumbai's development. By excluding stilt parking from height calculations, the government seeks to accelerate redevelopment and benefit numerous residents in the region. Coimbatore Corporation initiates demolition of encroachments on Kanapiran Mills Road. The Coimbatore Corporation has commenced the demolition of structures encroaching upon Kanapiran Mills Road in Ward 50. Last week, 13 houses were removed, with the remaining encroachers granted time until the end of April due to ongoing student examinations. This road serves as a crucial link between Souripalayam Road and Trichy Road, aiding residents from areas like Masakalipalayam, Souripalayam, and Annamalai Nagar in bypassing peak hour traffic congestion. The corporation had previously issued eviction notices in 2023, leading some residents to vacate. Following a recent inspection, more eviction notices were served. Efforts are underway to allocate alternative plots to the displaced families, with the process expected to conclude by April, restoring the road to its original width. Supreme Court stays probe against Madhya Pradesh, Aryara chief until April 2nd. The Supreme Court stayed the investigation against the Madhya Pradesh Real Estate Regulatory Authority RERA chief until April 2nd, offering temporary relief amid legal proceedings. The case involves allegations against the official, which have sparked discussions about transparency and governance in real estate regulatory bodies. The stay order delays further inquiry, allowing time for legal arguments to be presented. Industry experts are closely watching the outcome, as the case could influence the functioning of ARERA authorities across India, particularly regarding regulatory oversight and leadership accountability. Haryana government to continue auction system for HSVP plots. Rules out lottery method. The Haryana government has reaffirmed that plots under the FABK Haryana Shahari Vikas Pradhikaran HSVP will continue to be allocated through an auction system rather than a lottery. This decision aims to ensure transparency and efficiency in land allocation, while maximizing government revenue. The auction method is considered more beneficial as it prevents manipulation and enables competitive bidding, leading to fair pricing. This move aligns with the government's broader efforts to streamline urban development and attract serious buyers while discouraging speculative transactions. Indore Development Authority proposes 1,650 crore rupees budget for new residential projects. The Indore Development Authority, IDA, is set to propose a 1,650 crore rupees budget for the upcoming financial year, with a focus on launching new residential schemes. The budget also includes provisions for urban infrastructure projects, including a convention center near the Super Corridor and 2 interstate bus terminals, ISBTs, on Bhopal and Dhar roads. These developments are expected to boost real estate activity in Indore by providing better connectivity and modern facilities. If approved, the budget will play a crucial role in shaping the city's urban landscape and attracting further investments. Mumbai. BMC issues notices to 20 Juhu housing societies for unauthorized footpath alterations. The Brihan Mumbai Municipal Corporation, BMC, has issued notices to 20 housing societies in Juhu for modifying footpaths on Gulmohar Road and NS Road, impacting pedestrian movement. Following complaints from residents, officials found unauthorized carriageways constructed for vehicle entry and exit, creating safety hazards, particularly for senior citizens. Activists highlighted the growing issue of footpath encroachments, especially in redeveloped buildings. The BMC has directed societies to rectify these modifications as per its guidelines. Residents have urged stricter enforcement to prevent further encroachments and ensure safe pedestrian pathways. Ulhasnagar Civic Body publishes list of top 100 property tax defaulters. The Ulhasnagar Municipal Corporation, UMC, has released a list of the city's 100 largest property tax defaulters, which includes properties owned by politicians and prominent builders. Despite the implementation of the Abhay Yojana scheme, offering up to 100% relief on late payment fees, many property owners have not cleared their dues. The UMC warns that if these defaulters fail to settle their outstanding taxes, the corporation may initiate property seizures and auctions. Currently, out of 183,550 properties within UMC limits, there are arrears totaling Indian rupees 833 crore and 30 lakh, with only Indian rupees 126 crore recovered as of March 22, 2025. Noida. Gautam Budh Nagar proposes 20% to 70% circle rate hike. Authorities in Gautam Budh Nagar have proposed a circle rate hike ranging from 20% to 70%, a move that could significantly impact home buyers and property investors. If approved, this increase will raise the minimum property valuation for stamp duty calculations, making real estate transactions more expensive. Higher circle rates could also influence market prices, affecting affordability in Noida, Greater Noida, and surrounding areas. The proposal is currently under review, with stakeholders expressing concerns over its potential impact on housing demand and investment in the region. Experts predict that this move may impact demand, especially for affordable housing projects. Kolhapur civic body maintains property tax rates in 2025 budget. The Kolhapur Municipal Corporation has announced an Indian rupees 1,335 crore budget for the 2025 to 26 fiscal year, keeping property and water tax rates unchanged for the fifth consecutive year. While maintaining stable tax rates, the budget includes a 10% hike in user charges for municipal services. The move reflects the civic body's focus on revenue generation without significantly burdening property owners. The budget also prioritizes infrastructure upgrades and public services, ensuring that urban development continues while maintaining affordability for residents and businesses in Kolhapur. Coimbatore property registration revenue rises by 14.42% in 2024 to 25. Coimbatore has recorded a 14.42% increase in revenue from property registrations in the financial year 2024 to 25, reflecting strong real estate activity in the region. The surge is attributed to rising property transactions, government incentives, and improved infrastructure. The Coimbatore Municipal Corporation has also launched a Geographic Information System (GIS) mapping initiative for open space reservation (OSR) lands to enhance urban planning and prevent land encroachments. Authorities believe that this step will help identify unutilized lands, streamline property-related documentation, and support infrastructure growth in the city. The move is expected to benefit both policymakers and citizens by improving access to accurate land records and urban planning data. Lucknow civic body introduces property tax details and payment link on WhatsApp. The Lucknow Municipal Corporation has introduced a new service, enabling residents to access their property tax details and payment links via WhatsApp. This initiative is part of the civic body's digital transformation efforts aimed at improving taxpayer convenience and boosting collections. Citizens can now receive tax notifications, check dues, and make payments through the messaging platform. Officials expect the move to increase compliance and reduce delays in tax payments. The user-friendly digital initiative aligns with broader smart city goals to modernize municipal services and enhance efficiency. Mohali civic body surpasses property tax collection target by 10% in financial year 2024 to 25. The Mohali Municipal Corporation has exceeded its property tax collection target for the financial year 2024 to 25 by 10%, demonstrating improved taxpayer compliance and administrative efficiency. Officials attribute this achievement to enhanced digital payment options, awareness campaigns, and enforcement measures. The increased revenue will be utilized for infrastructure development and urban maintenance projects. Authorities are optimistic about maintaining this momentum in the coming years, with further efforts to simplify tax payments and incentivize timely compliance, thereby strengthening the city's financial position for future growth. Maruti Suzuki to invest Indian rupees 7,410 crore in third Kharkhoda plant in Haryana. Maruti Suzuki, India's leading car manufacturer, has announced an investment of Indian rupees 7,410 crore to establish a third plant at its Kharkhoda facility in Haryana. This expansion will increase the site's annual production capacity by 250,000 vehicles, reaching a total of 750,000 by 2029. The move aims to meet the growing demand for Maruti's vehicles, both domestically and internationally. Currently, Maruti Suzuki operates two plants in Kharkhoda, one operational and another under construction, each with a capacity of 250,000 vehicles per year. The company also maintains three other manufacturing facilities, two in Haryana and one in Gujarat. Navi Mumbai is taking stage as a promising destination for commercial real estate investments. Navi Mumbai is rapidly emerging as a prime commercial real estate hub, driven by its strategic location, robust infrastructure, and affordability. The city benefits from excellent connectivity via the Mumbai-Pune Expressway, the Mumbai Trans-Harbour Link, and the upcoming Navi Mumbai International Airport. Infrastructure projects like metro expansions and road network improvements further enhance its appeal. Affordable office spaces, coupled with lower operational costs, attract multinational corporations, startups, and global capability centers. The proposed International Corporate Park in Kharghar is expected to be a game changer. With a projected 13% annual growth rate in commercial real estate, Navi Mumbai presents a lucrative investment opportunity. Mumbai infrastructure. Gokhale Bridge, set to reopen by May 15 after extensive reconstruction. The long-awaited reopening of Mumbai's Gokhale Bridge is scheduled for May 15, marking a significant milestone in the city's infrastructure overhaul. Originally built in 1975, the bridge partially collapsed in July 2018, leading to its eventual demolition in November 2022. The reconstruction, costing Indian rupees 232 crore, faced multiple delays but is now nearing completion. The eastbound arm is already operational, while the westbound section will soon follow. The reopening is expected to ease congestion between Andheri East and West, restoring a crucial commuter link that was severed for years. However, concerns remain over alignment mismatches with the existing road network, which could lead to additional challenges. Haryana. Hisar Airport, set to open by April 14, boosting regional air connectivity. The newly redeveloped airport in Hisar, Haryana, constructed at a cost of approximately Indian rupees 1,500 crore, is set to boost regional connectivity and specialized air services. Expected to be inaugurated by April 14, the airport has received all regulatory approvals for operations. The expanded facility spans over 7,000 acres and includes an integrated manufacturing cluster, an aviation academy, and a maintenance, repair, and overhaul (MRO) facility. Alliance Air is expected to launch the first flight to Ayodhya, with other airlines also showing interest. The Airports Authority of India, AAI, will manage operations, offering incentives like low VAT on jet fuel and state-backed viability gap funding, VGF. Ahmedabad Infrastructure. Adani Group proposes to develop an SEZ near Shantigram Township. The Adani Group has proposed developing a special economic zone, SEZ, within its 600-acre Shantigram Township near Ahmedabad to spur business activity and investment. The company has requested over 29,800 square meters of land in Ahmedabad and 63,334 square meters in Gandhinagar, offering equivalent land in return. The township, home to 7,000 families, already houses luxury residences, offices, and recreational spaces. The SEZ is expected to attract firms, generate employment, and elevate regional infrastructure. While pending state approval, the project mirrors Adani's earlier success with Mundra SEZ and may significantly strengthen Gujarat's industrial and economic profile. Mumbai infrastructure. BMC to introduce digital dashboard for real-time monitoring of road concretization project. The Brihan Mumbai Municipal Corporation, BMC, is launching a digital dashboard to provide real-time updates on its 400-kilometer road concreting project. Designed for internal use, the system will enable senior officials to monitor progress efficiently. An appointed agency will update project data, track roadworks, and address challenges. The 12,000 crore rupee initiative aims to complete 75% of Phase 1 and 50% of Phase 2 by June 2025. While initially for internal use, the dashboard may be made accessible to citizens in the future, enhancing transparency in Mumbai's road development efforts. Palm Jebel Ali emerges as a prime investment opportunity amid Dubai's property boom as Dubai's property market continues to thrive. Palm Jebel Ali is gaining prominence as a lucrative investment opportunity, offering investors prime waterfront properties at competitive early-stage prices. A report from FM Properties highlights Palm Jebel Ali's resurgence, positioning it as an affordable yet expansive alternative to Palm Jumeirah. With larger plots, lower entry prices, and flexible payment plans, the development is attracting high-net-worth investors. The final phase of ultra-luxury villas is soon to be launched, with resale demand expected to drive prices higher. Experts suggest that the limited availability of waterfront properties will sustain long-term value appreciation, making Palm Jebel Ali a compelling choice for investors. Malaysia ranks 7th globally as top retirement spot for affordability and quality of life. Malaysia ranks 7th in the annual Global Retirement Index, attracting retirees with its affordability, high-quality healthcare, and diverse living options. Kuala Lumpur offers a low cost of living, with rent between 1,500 and 2,500 Malaysian ringgit, USD 300 to 500, and meals as cheap as 10 Malaysian ringgit, USD 2. Visa programs like the MM2H facilitate long-term stays, while real estate opportunities abound, especially in historic areas like Georgetown. World-class private healthcare is affordable, with consultations costing between 50 and 250 Malaysian ringgit, USD 10 to 50. Retirees can enjoy Malaysia's tropical climate, from cooler Cameron Highlands to beach destinations like Langkawi. These factors make Malaysia an appealing and cost-effective retirement destination. Beijing Capital raises 500 million USD via bond, signaling investor interest in China's property sector. Beijing Capital, a state-backed Chinese property developer, is raising up to 500 million USD through a 4-year dollar bond, testing investor confidence in China's struggling real estate sector. This follows its 450 million USD bond issuance in March. Strong demand has emerged, with order books reaching 3,200 million USD, and initial pricing set at 7.25%. The company is also offering to buy back its 2025 and 2026 bonds, aiming to refinance offshore debt. The rare issuance reflects renewed investor interest, likely driven by government stimulus, and could signal a gradual return of Chinese developers to global debt markets after years of financial distress. Japan's Nomura joins L&G to build 1,000 rental homes amid UK housing shortage. Japan's Nomura Real Estate has partnered with Legal & General L&G to build over 1,000 rental homes in the UK, marking its first entry into the market. The venture aims to address Britain's severe rental housing shortage while leveraging Nomura's expertise in large-scale development. The first project, set for South London, will deliver over 200 homes, with more planned across various locations over 5 years. Nomura will provide most of the investment, while L&G will oversee development and operations. The deal also strengthens LNG's ties with Japan, following previous collaborations with Mitsubishi Estate and a recent partnership with Meiji Yasuda. That's a wrap for today. Tune in tomorrow for the latest headlines.